Bitcoin prediction nailed again! Miss this and miss the next bull run. The market is correcting and sellers are in control for the moment. But this is just the surface story. Zoom out and the long-term signals tell a very different story. Bitcoin has a strong potential for an explosive rally ahead. You saw it, right? I kept saying in my videos, it's moving, it's going to rise, that's it, that's it. There's been massive activity happening under the surface, and it was strange that the price hadn't reacted yet. But I told you, it's only a matter of time before it explodes. Now, take a look at Bitcoin's recent price. I've said it many times, institutions are quietly buying, and the market always moves before the news. And this time, the pattern was spot on again. If you think this was just a coincidence, you're going to be even more surprised, because this is just the beginning. This rebound? It's not the end. The market is already moving toward the next scenario. So, the real question is, what's coming next? What kind of money is entering the market now? Where is it going? Which coins are moving? When and how? I'm your host, Neil, and I will guide you through the flow starting now. First, let us start with the Heatmap and see what the charts are telling us. Bitcoin opened the session at 105.7k and moved sideways for a bit. Price was pretty stable, nothing exciting at first. But then, boom! The price suddenly jumped to 107.7k, triggering a wave of short liquidations along the way. But it didn't last long. The price put back to 106.7k, right where we saw a thick yellow support line on the chart. That support line acted like a trampoline. Price bounced off and started climbing again. It broke through the resistance at 108.7k, you can see the yellow line, and just kept rising, liquidating more shorts as it moved up. Eventually, it hit a new high at 110.6k. After that big move, the price cooled off a bit and settled down. At the time of this recording, Bitcoin is trading at around 110k. Now, let's talk about key levels. Up, the resistance zones. The next big resistance is sitting at 111k. That resistance zone stretches all the way to 112.8k, though the lines get thinner the higher we go, which means less selling pressure up there. Down, the support lines. On the downside, there are multiple liquidation zones. The closest one is around 109.1k to 108.8k. Below that, we've got 108k and a much stronger support zone that stretches down to 105k. Keep an eye on the thick yellow support line at 106.6k, that one's been solid so far. Conclusion: what we are looking at right now is like a liquidation battlefield. Every time the price dips, it gets bought up fast, and that thick support around 106.6k, it is acting like a launch pad. But here is what really stands out. The resistance above isn't that strong. This chart doesn't just look bullish, it looks ready to pop off. So stay ready, because when it moves fast. Time to dive into the CVD and check out what the whales are doing. First, take a look at the fire chart. You will notice the blue price line climbing steadily. It's been cutting through heavy selling pressure again and again. And now, that resistance is building up once more at the top. But from the way things are moving, it looks like it could break through any moment. Now, check this out. The brown line tracks big whales orders between 1 million and 10 million USD. And they are moving like a pack. They are not just buying, they are accelerating. Next, we've got the purple line. These are orders between 100k and 1 million. They took a brief pause, maybe took some profits, but it didn't take long. They are back and riding the buying wave. The smaller players, the shrimps if you will, aren't keeping up. Even though there is a light buying trend, it's weak. So, what's the takeaway? The market is being driven by strategic accumulation. Not by noise, not by headlines. Whales are actively buying, while smaller players are hesitant or even selling. And when retail eventually steps in, as they often do during late stages of accumulation, it can trigger a sharp move upward. Not because of hype, but because the supply had already been absorbed. We are seeing a classic setup. Strong hands are positioning early, and the chart is quietly setting the stage for the next major shift. And speak of the devil, the news just dropped. You've all been waiting for it. It's been a week since the last one. And here we go again. MicroStrategy bought more Bitcoin. Come on, you knew it was coming. But this time they added 1045 bitcoins. If you just say, oh, they bought again, you are missing the big picture. Right now, MicroStrategy holds about 582,000 Bitcoin, almost 600,000, worth around 30 billion USD. You might be wondering, why do they keep buying this much Bitcoin and always so quietly? We only find out after the facts when it is reported in the news. Is that just coincidence? Nope. They always buy when the price dips, then announce it just before the price goes up. And every single time, Bitcoin starts to rise shortly after. This time is no different. But here's the real deal. They say they plan to buy, but they already bought before saying it. A few days ago, an article came out saying, we are planning to raise 2.1 billion USD for more Bitcoin purchases. But guess what? They had already bought 7.5 million worth of Bitcoin before saying that. What does this tell us? Institutions never buy after they talk. They buy first and speak later. Why? Because that's the most effective way to buy. While we are still deciding whether to buy or not, they are already in profit zones. And this latest 7.5 million purchase? That is just a test shot. The real buy, the 2.1 billion one, is coming. Or maybe it's already happening, and we will find out later. MicroStrategy isn't just buying Bitcoin, they are accumulating it systematically, quietly, always before the news breaks. So when we hear the news, it might already be too late. Interest rates, they are not coming down. Jerome Powell made it clear, no rate cuts until inflation is under control. But isn't it weird? Bitcoin is rising. Nasdaq is rising. Even altcoins are bouncing back. This isn't just strange, it's paradoxical. Earlier this year, what did everyone say? JP Morgan, Goldman Sachs, Fidelity, all predicted 2 to 3 rate cuts in 2024. But what is actually happening? Powell keeps repeating the same thing. No rate cuts. No new QE. Let's fix inflation first. Labor market must stay strong. So, the big question is, why is the market still going up? Powell's message is tight monetary policy, but markets are acting like we are finally free. So, what is really happening? The answer is regulation. Powell recently said, crypto needs clear regulation. In the past, this would have been bad news. But now, people are thinking, if there is regulation, then institutions can enter. If the Fed lets it, it's better than the SEC. The entire interpretation has changed. Before, regulation coming equal market drops. Now, regulation coming equal market rises. Why? Because markets now understand. Without some structure, big capital cannot enter. That's why the market is now more sensitive to institutional access than to rate cuts. Powell saying crypto needs regulation? That's not a threat. It's policy level recognition. He's basically saying crypto isn't going to be banned. So, here's the truth behind the confusing markets. No rate cuts equals short-term negative. Crypto will be regulated equals long-term positive. That combo leads to institutions quietly buying, retail investors getting confused. So, instead of just waiting for rate cut headlines, we should be watching regulation direction, institutional sentiment, and capital flows. Because that's where the market is heading. And in the next chapter, I will show you exactly who's buying, how much they are buying, and how they are doing it with real data. A French company just made a big move. A listed company called the Blockchain Group bought more Bitcoin. This time 624 Bitcoins. That's 68 million USD. Who are they? This company is not very well known in Korea or the US, but right now they are entering the top institutional holders lists, currently holding 1,437 Bitcoins worth over 150 million USD. So, where did the money come from? Here's the interesting part. They raised capital in 2 strategic rounds, issued convertible bonds via Fulgore Ventures, bought 544 Bitcoins. Additional funding round in late May, bought 80 Bitcoins. So, in total, they strategically raised funds and bought 624 Bitcoins across 2 phases. And here's the takeaway. This isn't just about one company buying Bitcoin. This tells us something bigger. Buying Bitcoin is no longer limited to a few famous companies. Even European public firms are building strategic Bitcoin acquisition plans. Now, Blockchain Group. Do you know the number they all seem to aim for? 10,000 bitcoins. That number is becoming a symbolic target. Meta Planet recently said, we have about 8,800 bitcoins. We will hit 10,000 soon. This French company seems to be on a similar path. This isn't just investing, it's a shift toward companies holding Bitcoin like a sovereign nation. Mainstreaming Bitcoin in corporate treasury strategies, a growing belief in Bitcoin as digital gold. And the thing is, we don't know they are doing it until the news breaks. Right now, they could be buying 10 more or 20 more. We just won't know until later. So, ask yourself, is now the time to rethink your view on Bitcoin? Or are you still stuck thinking, isn't it already too late? The US, Japan, Europe, more companies are becoming Bitcoin holders. And this trend, it has never reversed. So, what's next? How about Bitcoin lending? Let's talk about how Wall Street is now giving loans backed by Bitcoins. We are seeing something strange lately. Wall Street is now accepting Bitcoin as collateral. Exchanges are offering interest on Bitcoin, Ethereum, even ADA. For those of us who believe the Bitcoin is digital gold and self-sovereign money, this might feel a bit odd. Let's start with Wall Street. Cantor Fitzgerald, a traditional US investment bank, has launched Bitcoin-backed lending since May. Loan size up to 2 billion USD. Institutions can deposit Bitcoin, then borrow dollars using it as collateral without having to sell their Bitcoin. This is a powerful tool for them. But at the same time, we have to ask ourselves, is this what Bitcoin was meant to be? Decentralized, self-custodied, self-controlled? This feels a bit off from that. And this trend is trickling down to individuals too. Exchanges, especially ones like Bitstamp, are offering staking services. Ethereum, 3.1%. ADA, 1%. But let's be honest, this is basically a Bitcoin savings account. The thing is, the interest isn't even that high. You get 3% from your own wallet like Ledger, only 1% if you go through Bitstamp. Why? Because they take a cut. And yet, people still choose this. Why? Because it's easy and convenient. So right now we are at crossroads. Self-custody versus trusted custody. Institutions lending Bitcoin, exchanges offering Bitcoin interest, individuals starting to deposit. Bitcoin is slowly merging with the financial system. You can say it's good, Bitcoin going mainstream, or say it's bad, Bitcoin losing its essence. But either way, this trend is not slowing down. More banks, more exchanges. They will all start building products around Bitcoin as collateral and Bitcoin with yield. I have been saying it all along, institutions are quietly accumulating. And even if the market looks calm on the surface, everything is moving underneath. And yesterday, it finally broke out, just like I said it would. If you think this was just a lucky guess, you're going to be even more surprised going forward, because this wasn't based on a gut feeling. It was based on information, timing, market structure, and repeated patterns. I simply read the signs. Now, the choice is yours. If you want to move ahead of the crowd, don't miss what's coming next. In the next video, I will show you exactly how much money is really entering these markets and the real strategies to follow it. We nailed it this time. And the next move, it's already in motion. Make sure you stay with this channel, because this isn't the end, it's just the beginning.